conversation with the management of Bank of Maharashtra. We've got Mr. Nidhu Saxena, the MD and CEO of the company, on the back of their Q3 earnings. Mr. Saxena, good afternoon and thank you for your time. It's good to be chatting with you today. Let's talk about your advances figure first. It's seen a very healthy growth this time around. It's gone up by 20% on a year-on-year basis, but still you've maintained your guidance between 17 and 20%. Now that you're already growing at the upper end of your guidance, why have you not increased this guidance slightly higher? If you could help us understand that. Is it because of the base effect?
So, thank you for that question. Yes, we have kept a guidance and we remain conservative in sharing the guidance number, and we tend to be outperforming our guidance quarter on quarter. As regards the credit, yes, a lot of new opportunities are seen for growing, and this kind of a growth is for us going to be looking at as a sustainable growth going forward too. But I would still like to maintain my guidance number at 17%, because we are very mindful of which sector we are going to raise our exposures in. We are mindful of the underlying risk that will be posed to the bank when we are expanding our exposure in some sectors. So 17% guidance in a scenario where industry is having single or 8, 9, 10% kind of a growth in the credit side is a sufficiently high number to maintain. I would like to keep the guidance at 17%, but just since we are discussing this, I would like to share that we have a strong pipeline already with us. Around 55,000 crores of sanctions have been processed, and 33,000 crores are yet to be disbursed, within which in this current quarter, around 8,000 crores are marked for actual disbursement. So strong pipeline is there. We also made in this FY our GIFT IBU operational. GIFT IBU has become operational in November 2025. And today when we are talking, it is already a 400 million business, which is converting to 3,500 crores of business. And we plan to do a 10,000 crore business in the first 12 months of the operations. So what is happening in the GIFT IBU? The base is, yes, the kind of base effect you mentioned. There is no base, and we are the first time after 90 years, this bank has migrated into the overseas business territory. We are having a global balance sheet now on our balance sheet. And that's how we are also aggressive in new branch opening. We are opening in the first phase 321 branches in 18 months. So Project 321 is what we have called, wherein very scientifically down to the pin code level, we have identified which is the center, and within that center in which pin code we should be opening our next presence. So this also is going to sustain the high double-digit growth that we are clocking in next 2 to 3 years also.
All right, Mr. Saxena, that was a very exhaustive answer. But you've also guided for a 14% growth guidance as far as deposits are concerned. Is that achievable in Q4?
If you see the actual performance against the guidance of 14%, we have done 15% growth in deposits year on year, within which 16% is the CASA, the low-cost component of that deposit, where the focus lies is for the entire year. We have been focusing, so not depending on the high-cost bulk deposits, but trying to look at the low-cost component of the deposit and getting core business, stable business from our branches. We also have a vertical in the bank which is looking at institutional CASA in a very scientific way. We are approaching, because our understanding is the institutions have very specific requirements, and we look into those sets of needs and tailor-made our activities, products, give some tech-based solutions, and we are getting a lot of traction in the institutional CASA also. So yes, to answer your question, 14% deposit growth is achievable. I will not like to change the guidance. We are confident around that. But yes, within that, we will like to see how the deposit, what price I am getting the deposit, how it is impacting my bottom lines. We'll remain mindful of that and keep mobilizing resources for growth.
Okay, so Mr. Saxena, that sounds good. Talk to us about your NIMS outlook. This time around, you've done 3.87% and you've guided for 3.75% going ahead. Just want to understand this moderation in the guidance that you've given compared to this performance, and also assuming the RBI undertakes another 25 or 50 bips cut in their repo, how is that going to impact your numbers?
If you see the full year guidance which we shared, the number was 3.75 in the beginning of the year. While in the Q4 of the last year, FY 24-25, we achieved 4.01, and the full year NIM number was 4. But still, knowing that the rate cut cycle is in the offing, mindful of that, we kept a conservative number of 3.75. But if you see uh, uh, 3.75 as against that Q1, Q2, and the Q3, we have surpassed our guidance number. 3.85, which was in the Q2, has become 3.87. What has been happening is the 125 bips of rate cut announced by the regulator has its own impact. We have around 40% of portfolio which is linked to repo, where we are immediately transmitting the rate cut benefit. The deposit which is getting repriced comes with a lag. So mindful of rate cut cycle in the offing, we prefer it to be conservative in sharing our guidance. I will like to maintain my guidance number of 3.75, but if you see, performance is way above the guidance. And in fact, Q3, where our expectation was that we should not see any further rate contraction, that exactly has happened. My NIM for Q3 is 3.87 as against 3.85 in the Q2. And goes without saying, 3.75 to has as a NIM guidance is also a very decent number to maintain. And I would like to maintain that guidance.
Okay, and lastly, Mr. Saxena, talk to us about asset quality. Yes, we've seen very nominal improvement in the asset quality, but talk to us about how your recoveries are shaping up, and if that is going to have a positive impact on asset quality going ahead, or is this improvement in asset quality just a function of the book growing?
So, if you see today, we have reached, I will not say a pinnacle, there is always some scope to improve, but against our guidance of gross NPA to be maintained below 2, we have improved up to 1.6. In case of NNPA, our guidance is to maintain it below 0.25. We are again here at 0.15 in Q3. And in these two metrics, we are best in the industry. Even if you look at my PCR, it is standing at 98.4 around. And so there is hardly any aging provision issues. But we want to maintain the guidance to have GNPA and NNPA less than 2 for GNPA, less than 0.25 for NNPA, and which are decent numbers. In terms of, there is a big opportunity that sits in a potentiality is there. I have a huge stock of technical write-off. Around 20,000 crores of TWO book is there, where in the last 18 months, very consciously and through some strategy, we are trying to recover from the TWO book. Whenever any recovery is coming from the TWO, it is just going to go above the line and impact my OP positively. So we are keeping a number of 1,200 to 1,500 crores that we should be recovering from the TWO annually. Last year, we have done 1,375 crores. By Q3, we have already crossed 1,000 crores. So we are well within that 1,200 to 1,500 crores annually to be achieved from the TWO book in this year itself.
All right, Mr. Saxena, thank you so much for joining us and weighing in on the numbers for Bank of Maharashtra. We'll let you go on that note. And with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back.